window.
Hello traders, Gary Wagner here, approximately 10 a.m. in Honolulu, Hawaii. It is Wednesday, the 17th day of August, and this is the Daily Report for Gold. We have, third day in a row, substantially higher prices in gold, trading up about $5 on the day. Current print, $17.91.14 in the cash. Seems as though we're running into just a little bit of resistance. I'm pulling up a very, very short-term chart. This is a 133-minute straightforward candlestick chart. And I draw your attention to a series of Fibonacci retracements that I have been working with. This chart really is one that I actively work with, and what happens is as it makes new highs, we continually change these different areas of retracement. However, you can see right in here, this is our record top, 1814. You know, traders, sometimes it just gets hard continuing to say these numbers. And 1792 is a straightforward in terms of a short retracement sequence, and I'll show you where it starts and ends, but that's our 23% level. And that's just 23% of this move from 1719 here on the low end, 1814 on the high, so you've got about a 100-point move. This is about that 23%, or roughly a $23 retracement in that. Do I think this market is headed higher? Absolutely, but we can see that once it bottomed, after retracing, the move back up itself has, through a period of, we'll call it consolidation, or periods where it built a base, would do that before moving substantially higher. And you can see these particular areas in the market, and then you'll get a breakout. You'll, in many circumstances, get a type of market that will kind of blip up. You'll get that quick move up, and then following that, you'll get a long period of consolidation and then another move up. Well, traders, it absolutely appears as though we are in that period of consolidation. My belief is that for traders that are looking to add to their positions, you can look to add on the dips, you can look to add during the breakouts. I personally believe that in terms of timing right now, you can safely add to your position here. We're in at 1767. We've got some decent profits on the trade, and I think that adding to your position at this point might be the prudent move to do. Next chart I'd like to look at on this morning's show is going to be our 360-minute chart. And the one thing that seems very, very clear, if we look at it in terms of the basic top that we received in the market, and then look at where the correction led us to, once again, we can see a marketplace that is trading, I believe, in pretty much a textbook manner. And what I mean by that is this. The various retracement points that I have entered into the market, of course, our main one is coming from, call it 1580 up to 1814. So it's an entire move. Now, when we look at this move in its entirety, what you can see is that this particular retracement here, very, very much in terms of a textbook manner, about 1725 is the low, 1724. You can see these lows coming in just below that line. But traders, to me, it doesn't get any more textbook than this. In other words, a sustained rally, a correction, finds superlative support and finds it at a very, very strong Fibonacci number, and traders, a expected number. In other words, 23, it's kind of like the Three Bears story. 23 is a little bit too shallow of a retracement to feel comfortable, although sometimes you get it. In the case of this retracement here, market came up, it only retraced 23%, but it's a little bit too shallow. 50%, well, it's a little bit too deep. 38% is kind of right in the middle, and that seems to be a retracement that most technical traders that use Fibonacci are expecting a correction to go to. We're midway through the week, and it might be time to take a look at our weekly Henkin candles. When we do that, you can see that we have yet, now this is only Wednesday, but we do have 3 days now under our belt of trading, but we have another trade and another candle right now, no lower wick, nice body size. Tells me that this trend, in terms of the momentum, the strength, the steam of it, the power behind it, is still very, very strong. You're not getting the same type of move we saw last week, but traders, guess what? This week is not over. And lastly, traders, I leave you with what I'm calling the big picture. This, of course, is when we take a look at the move gold has made. We take a look at it in terms of time parameters for a very, very large move. This is the beginning, I think, of that super bull cycle, October 2008. All the way to present. My sentiment is that this bull cycle will probably last us another couple of years. And for traders who've been following some of the work that I've been doing, my personal belief at this point is, because we have seen this market roughly double every 3 years, my personal feeling is that trend will continue. The one thing is that it's been doing that, trading within this channel here, and we had an absolute clear and utter breakout of that channel back last week. And so the reason for putting in this upper channel line here is, my basic assumption is that if we've truly broken to higher ground, what is most likely is that this market will now begin to trade within this channel, making what used to be our upper level now a support channel and then a new resistance channel. And in that case, it's going to really change the time perspective of the numbers that I'm forecasting. Not necessarily the numbers, but the amount of time that it takes to get there. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow on Thursday for another daily update and review. Bye-bye.
Many sights to see. And when I look in my window, so many different people to be, that it's strange